Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here's some of the trends we're going to be diving into. Markets seem to be shrugging off this government shutdown. At the end of Wednesday's session, all major indices did end the day higher. And salary matters, but it's not the only thing on new hires' minds. We're talking with an expert at ZipRecruiter on some recent hiring trends. And some investors are skittish about a possible AI bubble and inflation concerns, among others. We're taking a deep dive into recent retail trading trends. With the government shutdown now in effect, the big question is how this disruption filters through the economy, from hiring trends to consumer confidence. A new ZipRecruiter survey zeroes in on new hires and what their choices reveal about the strength of the labor market. Joining us now is ZipRecruiter economist Nicole Bachaud. Nicole, it is great to see you on set. I want to dig into this survey, Nicole, but first, listen, you're an economist, you're here on set. I got to ask you about the government shutdown. I'm just curious how you're thinking through that shutdown, Nicole, as an economist, and what you think it could mean for the labor market, how you see the labor market evolving just broadly now and ahead.
So the biggest impact from the government shutdown on the labor market is going to be on the jobs report that's supposed to come out on Friday. A lag in this report is going to really impact a lot of the business leaders and other organizations that rely on this timely data to make decisions about what's going to be coming next. So seeing a delay in the report coming together is going to leave a lot of decision makers kind of in a blind spot, not being able to see how the current labor market is moving, and that's going to lead to some uncertainty. Could impact consumer confidence and spending as we see, just this gap in data that could be existing depending on how long the shutdown lasts.
What do you do as an economist, Nicole? Like, if you don't have that data, that government data, can you fill in the gaps or no?
So ZipRecruiter has a significant amount of internal marketplace data on job postings and applicant activity. So we have a good pulse internally at ZipRecruiter on what we're seeing and the direction we see jobs moving in. That's really helpful to fill in a lot of the gaps and give a more timely response. There are other data organizations out there as well that are able to put together different pieces of the labor market story. And so kind of threading all of those together is a great way to be able to still keep a pulse on what's happening right now in lieu of having that centralized source from the BLS. That will remain a key player for a lot of, again, those decision makers who are going to be looking at the labor market movements and trying to figure out what that source of truth is really going to look like moving forward.
And based on your data, Nicole, does it look like a labor market that's still just cooling here? Is that what you see?
So I wouldn't classify the current labor market as cooling. I would say it's frozen in place. We're seeing a lot of workers and employers both stopping any sort of movements.
I did hear some commentary, Nicole. I don't know if you agree with that this was the trough. Do you agree with that or no?
I agree with that. We're seeing internally at ZipRecruiter, jobs will likely continue to slow for the next couple of weeks. So if we do see the report coming out on Friday, or if it's delayed a couple of weeks, I'm anticipating that's going to show us that jobs have continued to remain very slow. Job growth has remained slow. But we're seeing internally through ZipRecruiter survey data that employers have this pent-up demand. There's an anticipation that the majority of employers are going to be increasing hiring over the next 12 months. So there's a lot of desire to hire. It's just the economic uncertainty, the way that tariffs are impacting prices right now and business bottom lines, that's drawing a lot of uncertainty and clouds around where the decision is to move forward. And until businesses have a clear path to the next step, we're going to continue to see this pause staying in effect.
Let's dig into this survey you all just released. And it focuses on new hires. First, just right there, Nicole, why focus on new hires? Why focus on that group in particular?
ZipRecruiter also does surveys on job seekers, but new hires really help us understand how people who have gotten jobs within the last 6 months, how they're faring, what decisions they're making, what types of jobs they're going after. And what we're seeing is there's been this restructuring in the thought process for new hires in the types of jobs that they're going after. We're seeing that the job search duration is getting a little shorter. We're seeing response time from employers is picking up. Fewer applications being submitted by the average new hire. And that's telling us that new hires are being a little bit more targeted at the types of roles they're going after and finding a better match between their skills and qualifications and the types of jobs that they're ending up in. So there's just a little bit of a better match happening right now.
I thought it was interesting that job hopping is slowing. What explains that? And does that suggest anything broader about just confidence in the jobs market?
As much as employers are slowing down their hiring, we're seeing employees sticking around in their roles longer as a way to wait out uncertainty in the market.
Right.
A stable paycheck is better than the risk of jumping to something new. So we're seeing a lot of employees preferring stability, finding jobs that they are planning on staying in for longer, and we're seeing fewer job switching behaviors amongst new hires.
When people do job hop, is the number one reason still pay?
Typically, we see job switchers receiving higher pay than job stayers. That has not been the story for most of 2025. Job stayers have been rewarded for their loyalty, where job switchers are looking for things outside of pay, like flexibility and culture fit, in terms of what they're desiring in that new job over higher compensation.
Finally, obviously I'm mandated, I'm required to ask about AI. We have to talk about it. Is AI playing any kind of role here? Did that get picked up in the survey of new hires?
Absolutely. AI is changing the way that jobs are showing up, the skills that candidates need to display, the way that hiring process is working. All of these things are changing rapidly with the introduction of AI across industries. So in our data, we're seeing the majority of new hires and job seekers are using AI in their application process, in their interview preparation to get them ready to start their new roles. This is especially true for older workers who are returning back to maybe post-retirement and looking to change industries into a workplace that might be unfamiliar for a lot of people who are coming back into it. And we're seeing AI helping to fill experience gaps and provide a lot of navigation and expertise for people who otherwise would be lacking in those skills.
Nicole, great to see you, especially on set. Thank you.
Thank you so much.
The Dow, the S&P 500 notched records as the U.S. government entered its first shutdown in 7 years. And Yahoo Finance's Jared Blickery joining us now with the trading day takeaways. Jared.
To borrow a catchphrase from Chef Ramsay, shut it down. And we were supposed to have a bad month in September, according to history, and now we got a government shutdown. We got green across the board. We got record highs in the Dow. I think the NASDAQ composite just missed, but the NASDAQ 100 made it. S&P 500 made it. Things are looking pretty bullish here. Yields were going down, and here's another one. I like the fact that the dollar and yields were going in lockstep. Post-Liberation Day, we saw them kind of diverging. So my concern was that we'd see a weaker dollar and also people selling bonds, which means sending yields up. That's not what happened today. So people are clearly not worried. And we can even take a look at the VIX here. Look at the VIX, that's not it. VIX Volatility Index at a 16. I accidentally hit the Philly Semiconductor Index. That closed at a record high. So things are looking pretty bullish right now, Josh.
So if we have that shutdown, Jared Blickery, what happens to all the government data we rely on as investors? What about jobs, inflation?
Fortunately, Ashton Kutcher is making a sequel to his hit there. Dude, where's my data? I had the opportunity to sit down with Joe Bruce Willis earlier today for Stocks in Translation. The episode drops Thursday, 8:30 a.m. Eastern. And he kind of brought up some of the broad measures of data that the Fed might be looking at as an alternative, as well as some other interesting points. Let's take a listen.
I'm a little bit more concerned about the direction of inflation, to be honest with you, than I am employment. And so the Fed's got a much more difficult degree of landing because, believe it or not, the Fed gets a weekly update of the ADP estimate.
Oh, interesting.
They do. Most people don't understand that. So the Fed's not flying blind when it comes to the labor market, right? Inflation's a little bit more difficult. They're probably going to be talking to the MIT Harvard Billion Prices Project and to get an idea of what's going on. There's a whole host of alternative data that we're all going to be talking about for the next number of years.
Yeah, really interesting. I didn't know that the Fed gets an advance
copy. I did not know that either.
On a weekly basis and ADP is private. So of course that came out today negative, was a surprise. There's some other measures, but inflation, kind of the bogeyman. Also, there's kind of a disparity between the investors in the bond market, what they're seeing inflation as, and what the average person. So Main Street, Wall Street, everybody should just take a listen to this episode. I found it pretty eye-opening.
What else was up today?
We got to talk crypto because crypto has had a nice few days. Let's check. We got to check on the price of Bitcoin here, and I know it's in this list. There we go, 117,420. And I was pointing out yesterday, I was looking at the range that we were in, and guess what? We're still in it, but we are now well off the lows here. So we kind of dipped down, had a little fake out, false break to the downside, which Bitcoin is famous for, and now we have popped right back up. We're in the middle of the range, so anything could happen there. We could come back down and test, but I like the strength that we've seen over the last few days. Here's the 5-day look, 7%, not huge for Bitcoin, but it's just kind of part and parcel with this very risk-on bullish momentum that we're seeing across the board almost.
What was the big surprise for you in today's trade?
You know, I'd have to point to healthcare because healthcare has been in the midst of a 2-day surge. This is what happened today. XLV up 3%. Over the last 2 days, XLV leading up 5.6%. Haven't seen a 2-day surge in that ETF, which covers large care healthcare, since March of 2020. That was the bottom of the pandemic. So some interesting, it has to do with an agreement between Pfizer and Trump, and it's kind of a green light for the rest of the pharmaceutical industry, but I thought that was interesting. And then more record highs with chips. We got the SOX and NVIDIA at record highs. So there you go.
All right, thank you, buddy.
You
Appreciate it. Investopedia's most recent sentiment survey showing AI bubble and inflation concerns in part fueling skepticism among retail investors regarding their investments. For more on how individual investors are approaching the market right now, we welcome in Investopedia editor-in-chief. That would be Caleb Silver. Caleb, always great to see you. So big picture, it sounds like folks are still broadly optimistic, positive, but maybe is it skepticism bubbling up here? What's going on? What's driving this?
I think we cue Mel Brooks here because it's a little high anxiety. Market at record highs, valuations
Phenomenal
at
reference.
Valuations at record highs, concerns every which way you look, whether it's the economy, whether it's the dysfunction in government, whether it's the fact that prices are rising, the labor market's slowing. Everywhere you look, there's things to be concerned about and wondering right now if things gotten a little too high, given where prices are, given these record highs we've had lately, despite all of the worries.
On the AI bubble talk, I'm interested to get you've been watching markets for a long time. It's interesting to watch, you saw Ken Griffin, David Einhorn, these are smart guys, kind of throwing some red flags here on all the AI spending. Do you share those red flags or no, you think, I've had other guys on the show this week, it's transformative. It's going to be bigger, they told me, than mobile, bigger than cloud.
Yeah, it is bigger because this spend requires a bigger degree of dollars. So when you're talking about a potentially $10 trillion spend out on building AI infrastructure, there's a lot more room to run here. And there's been comparisons to 1999, of course, but there was a lot of companies that weren't producing any revenue, that weren't producing any profits in that era. So there's still a build out here. The question is, have prices got too high? Look across every traditional metric, price to sales, forward PE ratio, the CAPE ratio, all the classic Investopedia terms that people look at when they look at fundamentals, and those all look screaming high right now, and you even heard the Fed chair.
Chair Powell said, he suggested we're kind of stretched.
Yeah, a little near irrational exuberance again on the one hand, but at the same time, these companies are stacking profits like we've never seen before in terms of what companies have been able to do on a quarterly basis, on a year-end basis. And when we're measuring a lot of those classic fundamentals, we're measuring them out 12 months. Well, these companies are building for the next decade. So if you look at it that way, maybe we're just in the middle of a very big spend, and this carries on for a while. But you can't help but worry a little bit about valuations right now, and you can't help but worry about the fact that the stock market's doing great. Capital markets, especially the risky part, is doing very well right now, while the economy doesn't seem to be doing all that well.
For Investopedia folks, what are their top holdings?
Their top holdings look very much like the top of the NASDAQ 100. NVIDIA is the top stock in almost all of their portfolios right now, surprise, surprise, but you also have Apple there, you also have Microsoft, you also have Alphabet, you also have companies, that Palantir is big in their holdings right now, and Microsoft, and when we ask them what they're holding now and what they would buy and hold for the next 10 years.
Yeah, where do they want to put money to work?
It looks very similar, which concerns us a little, me at least, because we're all kind of piling into the same things. But when you look at the top performing stocks so far this year, none of them are on that list except for Palantir. So a lot of everybody's piling in to the same safety stocks that they've held for a very long time, probably sitting on gains and loath to sell them or try to transition to another sector, to another part of the market. Though we did see international stocks climb in terms of people's attitude and what they're buying lately, what they're doing with their money, and also gold. Renewed interest in gold with gold at a record high. Welcome to the party, but now they're getting into it.
That's interesting. Gold enjoying a blistering run. So that made their list. Was that a shift? that interest in the metal or no?
When we asked them, what would you do with an extra 10 grand if
Yeah.
you had it to invest? Their top three choices are individual stocks, and it's kind of been that way for the past, 6 to 7 months, ETFs, which is more of a diversified safety play there, and then gold. First time gold cracked the top 5 in the whole time we've been doing this survey, and we started this back in 2020.
Did you survey their thoughts on the Fed?
Yeah, we asked them about the Fed. Did you think the Fed is handling monetary policy appropriately? Most people said yes. Do you want the Fed to remain independent? 79% said absolutely yes. Very important to Investopedia readers who are all individual retail investors that depend on the trust and the veracity and the independence of the central bank, but also they want to trust this government that they're going to do the right thing for their portfolios.
On their list of worries, did tariffs bubble up?
Tariffs is number one on that list. Tariffs and reciprocal tariffs, followed by inflation, and then they're worried about the accuracy of government data. That comes into full focus this Friday.
That's interesting.
Yeah, these are traditionalists who like things the way they are. They want to be able to look at data, make their investing decisions based on what's happening in the economy, based on fundamentals. If you can't trust the data, if you can't trust what you're hearing from our government agencies, it's really hard to invest in that type of an environment.
I want to get your thoughts on the government shutdown. Now, clearly, we were talking off camera. The market seems to be shrugging this off. Are you surprised by that reaction?
No, I think we've gotten pretty used to government dysfunction when it comes to investing and what happens in the stock market. We've had, 5 of these over the last 10 years, and guess what? The market's been higher every single time. And when these things end, when they finally do end, the market usually shoots up again after that. So I think investors have brushed that off. They're used to this. They're focused on corporate profits that are continuing to grow. They're focused on the fact that interest rates are going down and to the right, and they're focused on the fact that this administration is very light on regulation, so they're out there printing profits.
So I have the bulls come on here, and here's what they say. They say, listen, to your point, they'll say, earnings are solid, the economy seems to be hanging in there, the Fed's cutting, so I'm staying long. Do you agree with that? Is that too simplistic? What do you think?
It's been the right trade, and if you haven't done that, now you're catching up to it. Now your clients, if you're a professional money manager, are saying, where have we been? Why have you been kind of bearish this entire year? Market's up 24% since April 9th, up 13%. And
so now what, a year-end chase?
Yeah, well, I spoke to Dan Niles recently, a very smart analyst and an investor who we both know, who said there's going to be a lot of window dressing going into this month, and then maybe into next month. Come the end of the year, though, things could get a little bit dicey. Because
Why do you say that?
Because he does feel like global fund managers who have been mostly bearish all year until very recently have shifted to bullish, and their clients are asking them, where's the performance given the outrageous performance of some of the
I see the fee, where's the performance?
Exactly.
Fair enough.
Exactly. That's what the money's for.
Caleb, always great to see you.
Thanks for having me.
Thank you, sir. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market moves stories affecting your wallet.